Hey everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. We've been in business every market day since October of 2002, if you can believe it. And we're having a great time in this market. It's been not without its challenges. We had a bit of a sell-off last week, and especially so on Friday last week when news came out that Iran and Israel were lobbing bombs back and forth at each other. But as these things usually go, the dust kind of settled a bit over the weekend. We got some clarity on what the end game is for both sides, and there was some headlines that Iran is in a pretty bad place and they are ready to call it a day. They're ready to wave the white flag. All right, it's an interesting time we live in. We still have tariffs on the background. We've got the Fed making an announcement this week. They will not cut rates on Wednesday, but they may hint at cuts further down the road. And we're hoping that Mr. Powell will be nice and dovish, not hawkish as he sometimes is. Anyway, market's bouncing back quite nicely today. We've got some really good buy setups. I'm going to share those with you in just a minute. But hey, if you want to join us in the live trading room, which is where this is coming from, go to drstoxx.com, click on the subscribe menu, scroll down to the live trading room, and you can add on our brand new options room, which just hit an all-time high last week. We did the same in the live trading room as well, all-time high. If you want to join that as well, you can add it on at a discount. Alrighty, let's go over to some charts. So I'm going to show you. Here we go, trading view. We don't want to look at the VIX because it's not doing much of today. Now here's actually a tip. Here's a good trading tip. So when things look a little scary and everybody is coming out and saying, it's time to pull profits off the table, it's time to get bearish, it's time to add some puts, it's time to get into some inverse hedge funds. Or exchange traded funds rather. The first thing you need to do is, well, first check in with me in the live trading room because I usually have a pretty good sense of whether we do need to start hedging or not. Doesn't always work out in the right way, but more often than not, we do that. But we did not hedge last week, and one of the reasons why was because the VIX was pretty tame. If you are in a market situation that is escalating and there's a lot of fear out there, and the big players, the big money managers, the big money asset manager, trading desk people, hedge funds, mutual funds, those guys that are actively in the market, if they really have a good view that we're in for a pretty negative couple of weeks, you'll see the VIX spike quite a lot, like it did, like that on that day right there, right? That's a VIX spike. Open low, closed high, and it carried on for several more weeks. That's a lot of fear baking into the market. I'm not sure exactly what that was, but I suspect that was something around tariffs. And we didn't get that yesterday, or Friday. We did not get that Friday. We got a gap up. The fear happened overnight because the news came out in the middle of the night about the bombing and so on. But it was a gap and crap all day long in the VIX. So we knew from that nobody was really positioning on the big scale of things. No one was really positioning on the bearish side, and we didn't have to either. And I'm glad we didn't, because today's been a nice bounce back. Let's take a look at the markets. So here's the S&P 500. This is the micro E-mini. I believe it's the July contract for the S&P 500, and you can see it was a gap up. And sometimes after a negative bar, you get a gap up that just doesn't hold and it is right back down to the lows of the previous day. When that doesn't happen, that is very bullish, right? It's a complete rejection of all the fear that took place on Friday last week. Now, the good thing also, and here's another reason why we didn't have to get hedged on Friday. On Friday, the S&P tagged the rising 21 period moving average, which is above the 50 rising period moving average, which is above the 200 period rising moving average. And it bounced right back off of that level. That happened actually, I think, before the market even opened. It hit overnight lows, 3 or 4 o'clock in the morning, and then it was pretty much of a trend up day from that point. And then we got the gap up this morning. It was up about 1% at the bell. did not come back down much at all, and it's been just slowly, kind of progressively giving us a trend up day. And here we are up, not quite at the highs of the day, but near the highs of the day. And it is a multi-month breakout. Not quite all-time highs. We're getting very close, however. All-time highs, we need about another 70 points from where we're at, 70, 80 points from where we're at right now. We can do that in a very good day, and that may happen. I don't think it's going to happen tomorrow, because tomorrow people are going to be worried about the Fed. The Fed comes out on Wednesday, right? Today's Monday. Tomorrow's turnaround Tuesday. We'll probably get a little bit of back and fill as the market discounts whatever the Fed is going to do. The Fed comes out on Tuesday afternoon. You're going to get a big knee-jerk reaction up and down, and then the presser comes along and Powell starts spewing his view of the market. Not sure that we can trust him to be market friendly tomorrow. He'll probably talk a lot about uncertainty and tariffs. He's not a big fan of tariffs. He doesn't like the clouded future that they can create, because we're still in the negotiating stages of a lot of major tariff targets, and he doesn't want that. He wants something clear. He also, tariffs can spell inflation, and one of his jobs is to get rid of inflation. So he'll probably be a little bit on the negative side tomorrow, and the market has generally been a little bit skittish during the press conference. The market, however, so here typically what happens, right, on a Wednesday afternoon, you get this big knee-jerk reaction. It could go way up, it could go way down. During the press conference, the chairman will either calm the market fears, in which case we rally back up, or he'll come out and be like realistic about the forward concerns, and then the market gets a little skittish and starts to come back down. But the real reaction to the Fed in either case happens the next day, right? As everybody that has an opinion about the market prognosticates on CNBC and Fox Business and everywhere else, Wall Street Journal, when they start saying, here's what the Fed was really saying, and here's what the real concerns are, and here's what the market should be doing, typically you get a reversal of whatever happened on Wednesday, and that's the real response. So we can't really decide whether the market is just going to go gangbusters until Thursday, but I suspect it's going to be a little choppy, tight, volatile tomorrow, maybe a little bit on the weaker side on Wednesday, and then Thursday is when the rally resumes. And I'm sorry, Thursday's a holiday. So the market's closed Thursday. It's actually going to be Friday, which in fact is a better day for the market to give us its official reaction. Right, so the market will probably rally like crazy on Friday unless we get some other news coming along that we didn't expect. All right, so that's the S&P. I think we'll probably be up at all-time highs by let's see, today's the 16th. Yeah, by the end of the month, I think it's pretty realistic. June is typically quite a decent month seasonally, and it tends to be a little weaker in the front end and stronger in the back end. So we're entering into the second half of June. I think it should be pretty good. All right, NASDAQ. So I think the NASDAQ is it's just going to be, it's already up there. Is it up at all-time highs? I don't think so on a closing basis. Not quite. It's just spitting distance from a new all-time high, at least according to the Micro E-mini. And so the NASDAQ it's only 100 stocks. It's not 500. It doesn't have much in the way of healthcare and energy and utilities. The S&P 500 has all those. Those are the weaker sectors. The NASDAQ is really tech, and especially governed by the big mags at the top because it's a weighted index. And I don't think the NASDAQ is going to slow down much at all. So having a position in something like TQQQ, I wouldn't put it on today if you're not in already, but buying that on a dip, which we'll probably get tomorrow or Wednesday, buying TQQQ on a dip and hanging on to it for another couple of months should be a pretty decent trade. Small cap index, well, it is what it is. It hasn't been very good. We're way, way below all-time highs, and we're also quite a ways below 52-week highs. You saw how close the S&P and the NASDAQ are. The small caps have a have some work to do. However, we are entering into some very good seasonality for small caps. They tend to do very well in the summertime. Not sure why, but they do. If the Fed is at peak rates, and if we start to get some visibility on even just two cuts by the end of the year from the Fed, I think you'll see the small caps do pretty well. Uh, they also will do well on a tax cut regulation, which is in the works. The big beautiful bill. Haven't Don't think that's passed yet. I'm not sure what the delay is, but I'm sure all the backroom negotiations are going on now. And when that passes, big tax cut for the middle class, revising or renewing the Trump tax cuts from his first term, plus other things, you'll see the small caps do really well on that. I wouldn't even kick anybody in the pants for nibbling on some shares of something like TNA right now. So gold is down on the alleviation of Middle Eastern fears. Oil is down. Big gap and crap, right? Oil is way down from the open, at least, on a resolution or resolving or on at least the dust settling over there in Iran. I'm sure there are still explosions and bombings and stuff going on, but I think we're a lot closer to the end now than we were on Friday when oil spiked like crazy, and it should, right? That's what oil does when the threat of one of its big producing companies comes under fire. And when there's tension in the Middle East, you start worrying about getting oil transporting through. And if that gets blocked up, then oil prices will go up. But none of that seems to be happening right now. And so I think oil is a short. And the energy sector, I'll show you that in a minute, can be traded as well as a short. Bitcoin is back up, and it's back up with a vengeance, and I really like what's going on here. So I really did think that Bitcoin had another leg lower. I was thinking that, and let me show you this here with my marker. So I'm not an Elliott wave theorist guy, and I studied it for a while. I kind of had some lessons from somebody who does it professionally. I joined there's a Elliott Wave International Association, something like that, and you can get some of their courses. It's a very good thing, but I just couldn't. It's just not my thing. I just feel like it's a little too, um, a bit too hocus pocusy for me. But here's the thing: when you see a 5 wave move up, and then what I thought was going to be an ABC reactionary wave coming down, you kind of think, okay, well, that looks like a very perfect Elliott wave setup. So here's the 5 wave going up, right? One, I don't know if that's, no, that's not it. See, this is where I get stuck, right? Is it a 1? Is it a 2? Is it a 3? Let's say that's a 1, that's a 2. The 3 is not going to be that. That's too small. So it must be something like 1, 2, 3, 4. No, that's not it. 1, 2, 3, 4, 5. See how you have to kind of fudge things just to make it work? Anyway, 5 impulse waves higher. And then what I thought we were going to get is a typical A, B, C wave on the retrace coming down to something like a 50% Fibonacci retrace level, or even a 61.8, testing the 50 period moving average or something lower than that. That's what I thought. And so other than the long-term position we have in IBIT, I decided not to get on board. But today's move is very good. Big bullish engulfing candle, printing in a higher low than the previous pivot low, and we're pretty close to taking out the 110 pivot high, and then it's all-time highs above 112. So I think IBIT is ready to go. And did we buy? Yeah, we did. We did get into IBIT today over in the live trading room, and I don't think we have a position on in the options room, and maybe I should put one on over there, because I do think it's got I think it's just going to break out all-time highs, and then it's going to go up and down, up and down. It's probably going to do another sideways consolidation for a long time, but I think once it gets above 112, 112 becomes the floor. And yeah, I think a good long-term hold in anything Bitcoin related is very good. Okay, now let's go over to the mags. We'll take a quick look at the mags. So I don't want to sort these by percentage higher, which is what I usually do, where we look at the strongest and work down to the weakest, because I've got a bunch of other charts down here at the bottom, and I don't want them to get all mixed in. So let me see if I can eyeball Facebook. Facebook is up about 3% today. It's a gap up. It's holding that gap nicely. Came out with some news of a collaboration with something. No, it's a they own WhatsApp, and they're working on a way of monetizing ad revenue from WhatsApp. I kind of hope that doesn't disturb those of us that use WhatsApp as a free resource for communication. I use it all the time. My wife and I chat back and forth on it. She calls me through it. I send pictures to my daughters through it. I'm hoping I don't have to buy a subscription to do all that, or I get flooded with all kinds of ads. So we'll see if that works out. But anyway, that's why Facebook is up. It's coming into all-time highs here. It's a strong chart. It's got all kinds of good analyst support. It's got good price momentum. I'm not sure this is a buy here. I don't think I'm not going to be buying it, but it is certainly a hold. Microsoft has been your strongest of the mags. It's up at all-time highs, and every other day it seems like it's up at all-time highs. Microsoft, don't know exactly what's going on with that company and why it is so strong, but it hardly dropped last week. Last week we had a couple of days of some pullback, and then the big slide on Friday, and it did very little of that. It just bounced right back up again today to a new all-time high. Okay, so there are some nice setups. I think Tesla is good to go for 375, which is this line right here, more or less, just above that pivot high. And 375 to me seems like a lock. There's all kinds of good stuff going on. Musk and Trump seem to be kissy again. And Musk has the robotaxi and the Optimus. And the third thing coming out, that any one of those three things, at least those two that I mentioned, are huge revenue drivers. I mean, we're talking billions and billions, even trillions, maybe, in revenue for Tesla with those two new product lines. And then did I mention the robotaxi and anyway, it's got all kinds of good stuff coming out. So Tesla's a good buy. It's in a good position right here as far as I'm concerned. We're long Tesla in both rooms. We have shares in one room and calls on TSLL in the other room, and no plan really to sell those anytime soon. I think Google has been a bit sluggish. Compare this to Microsoft. It's nowhere near the 52-week highs or all-time highs. It had some trouble getting up above the 200 period moving average anyway for a while, but it's starting to get perky again. I like what's going on in the volume balance. You're seeing the indicators get up to the highs. That's a good thing. That confirms the price breakout, and it came back to test the 200 on Friday. Now look, Friday in most of the indexes was a red bar. It's a nice green bar for Google. That's also a plus. Not really doing a whole lot today, just kind of filling in some of the the extension of the price action on Friday today. So it's a little bit underwhelming, but I think if you bought it here, you're probably going to see all-time highs above 200 fairly soon. Netflix has not given us much of a pullback entrance for a while. When it does sell off for a couple of days, it's a good buy, and it did that last week. So it's just pushing off the rising 21. I don't think it's going to get below the 21 anytime real soon, even below the midline of the LRC. And this is a good buy right here. I'm not that interested. I'm looking for stocks that have a little more oomph to them, maybe a little bit more upside potential. But if you're looking for a good, a big blue chip mag stock to buy, this probably has the strongest chart and the best setup combination. Microsoft has the strongest chart, but it's not a good setup. This has both. We are long Amazon, and I think we're long Amazon in both rooms, if I'm not mistaken. We're at least long the calls in the options room. And like Google, it's been a little bit underwhelming, but it is starting to show us some good effort. It's well off the 200 now. The 21 is rising, and it's a good bit above that. The 200, the 50 period moving average is rising as well. All three are moving. We just need the 50 to cross the 200 to get that stacked MA look. So this is also good at right big gap up. That was not on earnings. That was the China day. Pull back into the 21 period moving average without closing the gap. That's important. And then right back up again to a new range high last week when the market itself was not that great. Amazon is doing some interesting things. They just bought a big chunk of AMD, by the way. They own 800,000 shares. I just mentioned this on Friday in my IBD Live appearance that they own, I think it's 800,000 shares of AMD. So this is interesting to me, these big companies, right? They're so big and saturated, they really can't push their product into new markets. They either have to come up with new product, they have to make new revenue with collaborations and partnerships or buyouts, acquisitions, or they just start buying big chunks of other companies. Kind of like my strategy is buying Bitcoin. AMD is buying. Amazon is buying AMD. So now AMD is up huge today, and we're long AMD in the live trading room. So that's a very good thing, and I'm really happy it's very strong because it was one of the stocks I was really pushing on Friday in IBD Live, and I was a little bit worried about it because it hadn't been doing that well, and just up huge today. Also, it's getting lots of good call flow and lots of a lot of interest from traders. So if you didn't catch the AMD move, then you can buy some Amazon, and you'll ride along with AMD as a proxy trade. I like using AMZU, which is the 2x leveraged version of Amazon. It's not as expensive. You can buy 100 shares a lot easier than the big $215 share price. And yeah, so there's that at Amazon. Those are the four that I like the best of the big mags. But you know what? If you can't decide between those, you can always just buy the mags index. Now, this is the non-leveraged version. There used to be FNGU. I don't know what happened to that. It turned into FNGA, and then it stopped trading as FNGA, and I don't know where it went. You could buy Bulls, B-U-L-Z, but that's not just the mags. It's a handful of other like software names and such. The mags is just the mags, just the top 7 mags. So that's the thing I like about it. It's a pure play on the 7 biggest companies on the planet, and you can see it is. Down here it didn't look very good, right? That's the tariff low. Came back down, right? Rallied back up. The market did that same thing. Came back down, almost tested the lows again, and then it's been kind of choppy, right? Just a little choppy. Here's your big China gap up, pull back again, gap up, pull back again, gap up, pull back again. So it's been a rather rocky ride, up and down, but it is trending higher, and it's above the 21. The 21's rising, 50's rising, 200's rising, and yeah, go for it. Buy it. It's ready. It's ready to go. One last note, AVGO I think is pretty good. I don't like the gap down on earnings. That was a concern, and typically when that happens, it can kind of stall any more upside after that for a while. So I'm not so sure AVGO is ready to go just yet, but outside of the NVIDIA, Qualcomm, AMD, those are kind of especially NVIDIA and AMD, those are kind of the 2 fun trades in the semiconductor space. There are a handful of other sort of supplemental names as well in there. AVGO is, it's not always a fun trade in terms of really moving strongly, but it's maybe the best one out there in terms of company stability, profitability. It's moving into the AI space and all kinds of other good stuff. So yeah, it's just that that little gap down on earnings is a little bit of a concern. So keep an eye on that. Now let me show you some other charts of interest that some of these were already in either of the two rooms or maybe in some of my newsletters, but others of these look like to me they're ready to go or getting ready to go. So a WCC, don't know anything about the company really. And it's really not that great of a setup compared to the ones we just saw. But what I like about it is that it's printing this inverted head and shoulders like a lot of other stocks. It just got up above the 200 period moving average, and it's above the 21 and the 50. Those are rising. And it just kind of has that look that, it's not going to be an exciting trade, but you could leverage this with some calls, which I think are pretty liquid for this name. And this looks to me like it's going to get up here to 200. So that's a 25-point move in maybe 3 or 4 months. You could buy the December 180 calls and hang on to those for a while. That should be a nice, profitable trade. We don't have any shares or calls in that one. TEVA is one I'm interested in because I'll show you real quick. If you go to TipRanks, which is the best site for looking at analyst opinion of a company, in terms of a drug maker or biotech or medtech play, it has some of the strongest analyst support of all the ones that are out there. It's a strong buy. Everybody is on a buy or better. $23 per share is your upside price target. That's a good 31% above current price. And you can see that there are some 4 and 5 star guys that are interested in it, but you can see for the most part everybody has really big price targets on TEVA. Now TEVA is an Israeli company, so kind of interesting to see how it responds to the fact that its country is experiencing some tension with a major antagonist, right? So it did fall off on Friday last week because of that news, and that did break temporarily a little short-term trend line. And when I saw that on Friday, I thought, well, okay, it's definitely, stay away from TEVA for a while. It bounced right back up above the 200, back into that little wedge there. And this is getting very tight, and this is a very bullish chart pattern, right? You've got the big run off of the lows. It went from like 13 to 18 in less than a month. And sideways consolidation is very bullish. We're getting tighter and tighter and tighter. This looks like to me it's going to want to get up here to about 21, 22, which would close the big earnings gap and hit pretty close to those target prices. I don't think I'd hold it over earnings. I don't know what's going on in the company enough to know whether that's a good thing or not, but I like it as a short-term swing trade into earnings. So let me show you the way you can short the energy sector. I've been staying out of energy plays for quite a while. I did some oil trades. I did some energy trades like ERX and so on, and I just didn't have a good feeling for the movement because I kept getting stopped out, almost all of those trades. So I'm still not in the energy sector, but if I were, because of this changing nature of the news, because oil prices went way beyond where they can reasonably be valued at, the energy sector itself is probably ready to come back in. And this is an uptrending LRC. You've got the pink zone reversal down here on very good volume. Looks to me like people are thinking the same thing. We need to short the energy sector, so this is the way you would do it. You buy ERY, which is a 2x bearish fund for the energy sector. You could also do DRIP, DRIP is the 3x version for that. I really like BSX. I actually have kind of a thought that I might do a wheel play on this one. The fundamentals are awesome. It is very undervalued, and it is printing against the rest of the market. It's not printing an inverted head and shoulders down at a bunch of lows after a pullback. It's printing them up at the highs of an uptrend. That's about as bullish as a stock can get. So here's your left shoulder, here's your head, and we are in the midst of forming the right shoulder. So it's not going to get the breakout move until you get up above about 107, but it looks to me like it's going to get up there very easily. It's down at 1015. you could. I mean, my thought was to sell something, not this week because it's a short week. You're not going to get much premium, but to sell something like the 100 strike for next Friday, you might get, I don't know, 150 bucks per put, depending on how many you buy. You would just sell those every week until you get put into shares. And if it's continuing to go up, you'd raise your strike price, of course. But if you can get 130, $140 a week selling near at the money, not quite at the money, I would go a little bit lower puts. Then maybe after a month or so, you get put into shares. You've already got $400 or $500 banked per trade. So you might get put into shares at like 102, but your actual price is 97 because of all that premium that you put in the bank already. So that's a thought I have with this one. I'm not sure I'm going to do it, but I just wanted to throw that out there. HIMS, a bit of a disappointment. I actually have a few shares of this from an old trade we did back in May. I got out of most of it. We took some profits. That was a while ago, back right in this little space here, and I think it went up to hit our target. But I still had about 30 shares of that trade in my account, and I just sold them into strength. I sold them up above 60 earlier today, and now it's at 58.74. So it has a wide range, and it doesn't seem to hold the highs very well, and sometimes it bounces nicely off the lows, but it can be kind of a frustrating trade if you're looking for consistent price action. But I think that it's got enough growth potential. The fundamentals themselves are a little bit, I don't know. I don't quite see the picture here. And analysts are in the same boat. They actually have a much lower price target. They're thinking this comes back down into the low 40s soon, by the end of the year. So anyway, we'll see where it goes. But I'm out of HIMS, and it's still on the target list, the watch list. VRT and VST are two different companies in different spaces, but they both operate in data centers, and both are growing like crazy. We have VST calls on in the options room, and VRT is one that I thought, maybe we get into some shares in the live trading room. This can be a very big moving stock. It was on the leaderboard, the IBD leaderboard, for a while when it was over here doing all kinds of good stuff. And then it cracked on, I don't know what that is. It cracked on some bad news because that's not earnings. And then it was all downhill from there. And it was a very, very fast drop, right? So it went from like 155 down to 55. That's a crazy move for such a fast growing company with so much future potential. But obviously, that was well overdone, way overdone, and it's starting to claw its way back. Analysts are still good on the company. IBD metrics are still pretty good. So I want to keep an eye on that. Maybe we'll get into this one before the close of the day. We are long some shares of what is this? CRWV. After it finally gave us a little bit of a pullback entry. And if you see this on the hourly chart, you'll see it more clearly. There it is. So it's just up and up and up, sideways, up. Here's a pullback, but we missed that one. And then back up again, lower high. So that's a little bit of a concern, but now a higher low. So what it's doing here is printing a bull flag or a pennant. And what I really like in terms of our position is that it's holding up near the highs of the day all day. And we're seeing some of these stocks now today that were hot in the morning, kind of cooling off quite a bit in the afternoon. CoreWeave is not. This looks great for a breakout move. And right up here, 192.00 is probably going to be the target. We're long RGTI in the, let's go back to the daily chart. And we're long in the live trading room. Just got into it today. The quantum computing space can be very tricky, very, very tricky. You got to go small. But there's some big moves. This QUBT, I think, is up 25% today. And we've got RGTI calls in the options room. We're in IONQ in the live trading room. And both charts look kind of like this. What I really like is the perfectly rounded bottom and then another pullback, rounded bottom, and it looks to me like it's scalloping higher. So scallops are where you get continuing series of higher highs, higher pivot highs, and higher lows that are in a rounded fashion, right? It's called scalloping. It's a scalloping pattern. It's very bullish, but you have to catch, you don't buy the highs, you don't buy the pivot highs, you buy down here in the little handle, right? And that's what we did. So Pins came out. They are collaborating with Cart, Instacart, and I really like what's going on here because there's such good synergy between those two guys. And we use Instacart all the time. I know if we're using it, my wife just used it today. In fact, she wasn't feeling all that great. Didn't want to get in the car and drive downtown to go shopping, so she got online in her bed, right on her phone, made a $150 grocery order, and in about 2 hours, everything was on our doorstep. So it's just if we're using it, and we're work from home people, so it's kind of nice to have that convenience. I'm sure that a lot of people are using it now. The chart for Cart is, well, it's this one right here. So it's right at the 50, big bullish engulfing candle today, pushing off the 200 period moving average. It's not necessarily in an uptrend. Nasty slide on earnings, but that seems to be behind it. And now with Pinterest, it's an ad thing, right? So Pinterest has a lot of food stuff. Instacart will sell the food stuff. So I think what's going to happen is that, if Pinterest has something that requires eggs, like a recipe for eggs, some kind of egg souffle or something, Instacart will come along and send an email out to everybody on their list saying, hey, here's a great recipe for eggs, and we have eggs on sale at your local Safeway or Publix or whatever. And so it's just a great synergy. I think it's going to be great for both companies, and we'll probably be in Cart one of these days. We're in Pinterest calls over in the options room. Google, we looked at that, not doing very well just yet, but I just want to see it get moving. It's been a laggard. So is Apple too, but I don't like Apple. I think Google is a better play. So China's back in the spotlight today. GDP out really good, much better than expected. They're moving back toward double-digit growth. They're like 6.5%, 6.8%, something like that. And they got knocked way back for a while. So getting China out of recession fear is huge. Getting China and the United States to a tariff deal, huge. And the whole consumer space in China has been way, way, way held back. BABA, of course, is a good example of that. It's a visual example of how it's been held back. And it's just going to skyrocket once those things get clear. So let's keep an eye on BABA. There are a few others. You can play yen as a play on the whole China space. JD is another online consumer, online retailer, and with all that comes with that, right? Not just retail. And it's not a very good chart, but the fundamentals are pretty good. And then FUTU is not a retailer; it's a asset manager or something. But because the economy is doing better, and with a tariff deal on the horizon, FUTU is really skyrocketing today. Very good. And the fundamentals of FUTU are just excellent, excellent. A couple more to mention. There are a series of nuclear plays, either nuclear energy, these two, or supplying the uranium to the nuclear power plants, which is this one. And they've been strong. They're strong again today. NNE and SMR. So I think SMR has a stronger chart, but NNE has some better fundamentals and better upside potential. So I would choose that one if I had to choose. All right, guys, that's all I've got. So let me shift back over to the live room. For about 5 minutes, 2:55, I'm going to cut this off. Type in some ticker symbols. Oh, the DeepSeek news. Yeah, thank you. VRT SG in the room reminded me that VRT got cracked on the DeepSeek. What was that? An invasion kind of thing? I forget the details. Anyway, everybody else knows. Okay, EAT. Let's take a look at EAT. Or Felipe. Yeah, so this is nice. This is a sequence of restaurants. Do they own Taco Bell or Burger King? Is it that kind of restaurant chain, or is this Applebee's? There's several restaurant chains that aren't the brand name, but they own the brand name, and this is one of those guys. So here's your all-time high. It's getting there. I assume that's all-time high. That must be. Yeah. And this is actually a really nice looking chart, right? Rounded bottom. When you see a rounded bottom like that, pay attention because it just doesn't get much better. And it's rising. It's doing these little scallop things, right? Here's your scallop. You don't want to buy the run higher. You want to buy something in the scallop. So is now in breakout mode, but this is the first bar of breakout, and I suspect it's not going to be the last. So if you're already long, hold it, move up your stop. If you're not yet long, you could buy it right here, 182. You'd put your stop just under Friday's intraday low, and note that it didn't fall back on Friday. So this is a play that has no concern at all with Israel and Iran. And it's up near all-time highs, so it really isn't that concerned about tariffs either. So I like this play a lot. I really do. Just not only for the chart, but for the fact that it's a tariff-free and geopolitical-free zone. So again, if you're not long and you want to get in, this is a good price, I would say, but you need to put your stop, maybe even to be a little safer, around 165. That's a deep stop. That's far away, but you should be able to start rolling it higher very soon. Your target price is a little trickier because once you get up above 192, you're going to be in all-time new territory, and there's no sort of structure up there to take, to govern where the next resistance line is. But here's what you do. You take the depth of this consolidation pattern. And I'm sure if we looked at the weekly chart, yeah, you would see that this is really at the top of a big uptrend. Yeah, very nice. Very, very nice looking chart. So you take the depth of the head, which I don't know what the percentage is there, but you just take that arrow and put it up on top, and that would be your target, right around 255 or so. And here it is at 182, 255. Now it has to break out first. No guarantee it's going to do that. It has to get through earnings, so I don't know if you want to hold over earnings. The last time it didn't do very well. The time before that it did very well. But I like the chart. I really do. Okay, what else are you interested in? Intel. So we did learn on that big green stick right there that Intel was starting to make some good moves. Not exactly sure why. I don't remember. I just remember it being in the headlines, and I remember seeing the call flow being good, and some chatter about it in my pro trading group. And then it was right back down the very next day, and that's not a good sign. It did lose a bit too on Friday, bouncing back today. So I'm looking for some bullish reasons why you would want to be in this. I don't know. I mean, Intel got beat by AMD long time ago and hasn't really recovered ever since. And I don't think they're making the kind of moves into like the AI space or data centers or networking, high-speed networking that some of the companies like Qualcomm and Avgo are making. So for me, it's just a no-go zone. And I don't really see much in the chart here. It looks to me, I mean, this is like trading like an overseas play, right? Like news is coming out overnight and it's up one day and down the next, and a lot of intraday gaps, which makes for a messy chart. Technically, this is just a stay away, right? Just too messy. I wouldn't short it either because it's not really setting up as a short. It's just not enough there in the chart. So I'm sorry, I'm going to pass on that one. TEM. Okay, so this is a play that Kathy Wood likes a lot, and not that that's a great. She's not exactly as bad as Jim Cramer, but she's been well off her game for quite some time now. Her fund is really coming back, and in fact, it's been doing really well lately. And compared to a lot of stocks, are getting hit on tariffs. And I think that's partly because she's been buying a lot of software names. I'm not sure if this is a software name or not. The AI in the name gives it away in terms of where they're aiming. But she's been buying a lot of software names. Softwares companies typically have very wide margins. They don't have they don't have stuff in their product line. Their product line is digital for the most part, and or intellectual property, and so they don't get hit on higher prices that are the fear of tariffs coming down because they don't have the rough materials or raw materials that they invest in. So I think this is good. Now you've got the inverted head and shoulders going on here. You've got a nice test of the 200 and the 50 period moving average a couple of weeks ago, and it's rallied nicely off that. It has broken out of this recent little cup. No, I like this. Everything I'm looking at here is bullish. It's not the most bullish chart out there, of course, but it's a good looking cup and handle. Your target is going to be 38 minus 70. Wow, 72. Let's just call it 70. So that would be 32 points plus 70, 100. Let's just call it 100 for your target. And that, I think, would be an all-time high. You probably don't want to be in all the way to 100, but the next move should be up to the upper 80s. And here it is in the low 70s. So that's a nice swing trade. Yeah, I like it. It looks to me like it's running out of steam a little bit up here. That's a little bit of a concern. If you just bought today, you might have to sit through a couple of days of drawdown. I think we're all going to have to sit through a couple of days of drawdown. Tuesday, turnaround Tuesday, and then the Fed day on Wednesday, and then we get back on track on Friday. That's kind of my map for this week. So if you just bought today, hang on. I think you'll be okay. You want to put your stop probably down below around 65. Yeah, 65 would be a good stop. I don't think you'll get stopped out. I think it probably will stay nicely above 68 or so. Okay, let me see what else. ASTS. Well, this one was, wow, still on fire. Still way on fire. All right, so I have regrets around this one because when the chart was here, the chart was in this area right in here, right? Before it came down and tagged before it made that pivot low. In fact, that wasn't the pivot low I was looking at. It was this, right? Yeah. So it was right in here, right in this area. And I started posting charts on, social media boards, stock twits and Twitter and everything else saying it's coiling up. It's getting very tight. This is a play with a lot of good press, a lot of interest. It's a momentum stock. I think it's a small float. There might be a big short position as well. And I said, this guy is going to squeeze. And then it broke down. It broke that trend line. It broke the 50. It broke the 21 EMA and started heading south. And then I thought, oh man, I look like such an idiot. Well, I just kind of gave up on it. And then a couple of days later, it's right back up inside that little wedge. And then it's just been all up from there. So just goes to show you never can tell what's going to happen in the market. But anyway, that's just trading. It's definitely a hold. I wouldn't buy it here. No. Definitely not. You don't want to buy a big green stick in general. In these kinds of momentum plays, obviously this is running up on news of some kind. And I don't know. I haven't kept track with what's going on with this company. So you want to keep track of what's driving the price, because once that dries up or once that gets priced in, and it may already be way overpriced, it will come right back down just as quickly as it went up. So be careful. But if you're long, keep putting a stop under the low of the day. So today you'd have it underneath Friday's low. That was a great bar for Friday. And then for tomorrow, you'd have it under today's low, and just keep trailing higher like that until you get stopped out. By the way, I did a study a long time ago on whether it was more profitable to have your stop price in place and a target price in place up at the nearest resistance level, thinking that, you can get up to that resistance level, it's going to stall, it's going to fall, it's going to turn right around, or it's going to go nowhere for weeks. You might as well just get out there and move on to a new trade. Well, that's a profitable way of trading. But if you're looking at a percentage return per trade, you'll be much better off not having a target price in place. Now, I trade with target prices. We trade with target prices in the room. I just prefer to trade that way. But you're much better off just trailing up a stop, because you're going to get into a stock like this, ASTS. and you're thinking, okay, it's gonna stall out here. I'm gonna sell it at 33.80, and then you're out. And then 4 or 5 days later, it's up at 42. You missed that whole run, but you would have caught it if you had just trailed up a stop without a target price. All right, little trading 101 right there. Let's do one more. AG. Okay, so this is a silver miner. This will be our last one. Well, this looks good to me, actually. Now, gold miners and silver miners have been doing well because of the geopolitical tension, and Bitcoin has been a bit on the weaker side until today, and the dollar's been weak, and so that's causing gold and silver to do really well. And I think we're also at peak rates, and so that also helps too. So silver miners have been lagging. Silver in general has been lagging gold. Silver miners have been lagging gold miners, and looks like this one is really starting to play catch up. So this looks good. That's a classic bull flag. Typically, bull flags, you have to have 5 bars minimum. Once you get past 5, it could break out at any time, and the expectation is that it's going to break out in the direction of the trend that led into the flag, which of course would be up. And the distance that you expect it to go in the next leg is the same distance as the leg that led into it. So your target price would be up here, right about 1040. And here it is at 830. So that's a good trade. If you're already long, hold it. If you're not in, I wouldn't kick you in the pants for buying some today, because it looks to me like it's ready to break out to the upside. All right, I'm going to go, guys. I'll produce this video, send a link into the main room. We'll continue trading the last hour together. God bless everybody. See you back in the room in just a little bit. Bye for now.